you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite
Welcome
low.
back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in and something very bad is happening right now in the housing market. Something that is very, very difficult to understand. No, I believe I understand what's going on, but let me explain what's happening, y'all. First of all, when we look at the laws of supply and demand, all signs are pointing to continued price decline happening in the housing market. The reason being, number one, demand is near all-time lows right now from many different data points. Also, inventory right now is absolutely exploding from a unit amount, but also, y'all, supply is also absolutely exploding. And so on top of that, price cuts are also surging right now across the nation. Yet, despite all of those things, prices are still going up. Now understand that is according to the Redfin data that we are about to review. And before I start reviewing that data, understand that it doesn't matter. Nothing that I'm about to cover with you really matters. What really matters is analyzing the subdivision of the properties that you're interested in purchasing. And if you guys have been following along, watching my lives, you understand and know that I do a market analysis on subject property subdivisions to come up with things like wedge or equity and things like cash flow. You guys, real estate, although it is the American dream, this is where we raise our families. It's simple math. If you want to understand how to get a really good deal, just take my free home buying course that I'm paying to have available for you. The name of this week's Redfin article is Housing Market Update. Listings absolutely, I threw the absolutely surge, luring some buyers off the fence, but near record housing costs price others out, and it's getting worse and worse. If you were already on the sideline and you didn't change anything about your life and you were already priced out, odds are you're even more priced out right now. Now, a couple bullet points. Number one, the median U.S. monthly housing payment was $2,686. Yikes. During the 4 weeks ending March 10th, that's just $30 shy of last October's all-time record high. We again are near all-time record highs, and they're not even counting 7% interest rates, which right now residential mortgage rates are in the 7% as of the filming of this video. Now that's due to a combination of still high mortgage rates and also rising prices. While mortgage rates came down slightly this past week after increasing for 4 straight weeks, they're still near 7%. And again, as of the recording of this video, they are at 7%. And sales prices are up 5% year over year nationwide. On a local level, prices have increased in all of the 50 most populous U.S. metro areas for the first time since July of 2022. Now, let's read this week's foolish optimism from this week's Redfin Realtor. Okay, so this is Redfin Realtor with their weekly foolish optimism, and they state buyers who can afford to may want to get serious about their home search now. Okay, so I mean, just how that starts, it drives me absolutely crazy, because anyone that is purchasing real estate should take it seriously. So why now take it seriously? Anyways, as housing costs are unlikely to fall anytime soon, the uptick in listings should be another motivator for buyers. There's more to choose from, and improving inventory may bring out competition from other buyers as we get further into spring. Some buyers have already gotten the memo, while mortgage applications finally increasing after weeks of declines. So overall, I'm going to say it's typical Redfin. Hurry up and buy a house before the spring rush of buyers comes back into the market. I'm going to tell you guys right now, I think the housing market is going to crash. I don't even think we know price discovery yet. And if we look at things like why have prices not gone down already, look at the deficit spending. Look at how much money the government is continuing to print outside of the lockdowns. Things are going wild right now, you guys, and it's only a matter of time before it completely falls apart, in my opinion. But what's important is what you decide to do and what you understand and how you purchase Real estate, again, I say wedge, cash flow, having no consumer debt, not using your emotions to find a house. Please don't use your emotions, okay? Use the data. And in fact, if you don't want to use the data, just sit on the sidelines. You're doing nothing wrong if you're sitting on the sidelines, improving your purchasing power. In fact, you're doing everything right if that's you. Alrighty then, this week's leading indicators, starting with the daily 30-year fixed rate average. Again, it's in the 7%. But according to this article, the average daily interest rate is 6.94%. Now that's up from 6.75% last year. And don't forget, you guys, this time last year is when interest rates really started going down. So that gap is going to start widening significantly as we make our way into 2024. Now, as far as weekly average, we're sitting at 6.88%. That is also up from last year, sitting at 6.73. So everything is way worse this time of year. Yet everyone's talking about how great the economy is and the labor market. Now let's look at demand. Starting with mortgage purchase applications, that's down a whopping 11% year over year. And mortgage demand was already in the gutter. However, that is up slightly. That is up 5% from a week earlier. Now, as far as home buying demand, you guys, that is down, as you can see here, 10% year over year, but it is up 5% from a month earlier. So they get to pick and choose what they want to put in this column. They're using weekly or monthly data, sometimes YTD. But regardless, you guys, when we look at year over year, you can see Google searches for homes for sale is down. Shocking. Absolutely shocking. It's 19%. You would think that just from the carnage out there, it would be up just from how crazy things are, but it is somehow down 19% year over year and down 4% from a year earlier. So demand in the gutter. And look at touring activity, you guys. Touring activity at this time last year, it was up 12%. So they're not even talking about this time of year. They're not even talking about today. They're talking about last year because it's so bad right now. They don't even have stats of what's going on right now. And it's saying it's up 29% from the start of the year. What about month over month? What about year over year? What about week over week? They don't want to show that data. Absolutely bonkers. Now, let's take a look at this week's winners and this week's losers. And I want to point out again, they're only covering the 50 most populous U.S. metro areas on this report. And really what I want to point out, you guys, is there are now no metro areas that are showing year over year price decline. So according to this info, everything is great in the housing market, but when we dig in deeper, let me show you a few metro areas that are actually on the year over year price decline list, because again, nothing's here. But before I do that, let's go over the top 5 metro areas for the week, starting with the new #1 metro area at San Jose, California, at an increase year over year of 16.3%. Then we have Newark at 15.1%, and then Boston 14.9%, West Palm Beach at 14.8%, and Fort Lauderdale, Florida at 13.8%. It is going to be interesting to see if they can sustain this type and this level of property price growth. I don't think they can. And again, nothing for the decliners. However, I told you guys that I have been tracking some metro areas to just keep my eye on things, starting with Jackson, Mississippi. You guys, Jackson, Mississippi right now is down 43.4%. Right now, year over year is cut in half. That's insane. Now, I also want to point out this is the 3-year look. You guys can go 5-year, and there's also a drop down. Now, I had someone that I used to be friends with, used to be part of our community, that was so adamant about only looking at single family residences. This guy had an actual, what I believed as, had a meltdown about how we should only look at that. But again, I'm looking at housing units. I'm looking at the entire picture as I've always been. But again, just for the sake of only looking at SFRs, when I select SFRs, it goes from 43.4% and it goes up. It actually, in this situation, gets worse when we only look at SFRs, and it's down 44% year over year. Now, on top of that, Dallas is also down 0.59% year over year. I'll be keeping my eyes on Texas, you guys. There's many metro areas in Texas that are down year over year and many different zip codes. As a result, I believe, of the overwhelming new construction. And I think Dallas is in trouble because they just became net migration. So they have net migration. But anyways, when I select single family residences, it actually, again, gets much worse. So when we only look at SFRs, it's actually down 4.4% year over year in Dallas. How about that? Now here's Austin. Austin's also down Again, 2.6% year over year. This is Redfin, by the way. This is their own company. I'm just reading the most updated information on a month over month. We just looked at week over week, 4-week rolling average. But when we change it to single family residences, it actually goes from 2.6% to up 0.7%. Wow. So if you purchased in Austin, you're only down 150,000 from peak. Not too bad. Moving right along to San Antonio, you can also see another Texas metro is down year over year, 1.9%. But when we look at only single family residences, again, it gets worse, sitting at a loss of 2.2% versus 1.9%. Very interesting stuff here, guys. Moving right along to New Orleans, somehow New Orleans appears to have rebounded, sitting at only a loss of 1% year over year. But when we select single family residences, it remains essentially unchanged at 0.96 loss year over year. Keep your eyes on New Orleans. A lot of stuff going on there right now. Now, when we move on over to Boise, Boise ain't doing too good. Boise's down year over year, 6.3%. Massive decline in Boise, but in all fairness, when we do changes to single family residences, it goes from a loss of 6% to a loss of about 0.5%. You can see way off of peak. Now, moving right along to our last metro area, which is Myrtle Beach. You guys know that I have boots on the ground, and I've been saying, watch out, Myrtle Beach. Look at you guys. It is now on the year over year price decline list, sitting on a loss of 5.5%. But when we look at only single family residences, it goes from 5.5% comic lever all the way down to 26% year over year price decline for single family residences in Myrtle Beach. All of that to say, you need to access MLS, you need to look at subdivision, and you need to access sold homes. That is how you really know if you're getting wedge, if you're getting a great deal, if you're getting cash flow, and things of that nature. Now, let's visualize some of this data. And let's start with median sales price. Now, that's up. Okay, so median sales price is up year over year, 5.1%. That's a measure of this time last year. So that's year over year. That's 5.5%. Now, week over week, which is basically measuring from here to here, is also up. It's not going up at that trajectory. We already know Redfin has misleading data when it comes to their housing market visualization. We saw that all last year, all this year, but regardless, prices are up week over week according to this information and up 5.1% year over year. So do me a favor. Do you guys think that we're going to have continued price growth, which will look something like this? Basically, it'll have to go over last year. Or do you think at some point this year, it's going to start going under the prices of last year, causing year over year price decline? Let me know what you think. Obviously, a lot of people are worried. This year's an election year. We have massive deficit spending. February updated, we now have $823 billion of deficit spending so far this fiscal year. You guys, it's absolutely incredible. The amount of deficit spending is as if we're already in recession. Regardless, let's move on. Now, I don't know what's going on with median asking price, but that is up 4.9% year over year. You can see that here. That is the gap between here and here. You guys, regardless, what I'm seeing here is sellers still want to hold on to having overwhelming leverage in the housing market. And there are some buyers that are willing to pay these outrageous prices. But asking price, you guys, is starting to stabilize. Regardless, it is up 4.9% year over year, as you can see here in this graph. Now, here's the very beautiful thing, you guys, new listings of homes. Okay, so first of all, pretty much all areas of demand is down and all areas of inventory, as you're about to see, is up. Starting with new listings, that's up 13% year over year. Now, we want it higher. Okay, so we want it way up here, but nevertheless, this is a great start. This means that demand is staying down. In fact, it's actually lower than last year. But we need smarter buyers, not buyers that are willing to pay even more ridiculous prices. But regardless, new listings are up year over year. That is a great thing to see. Now, when we move on to active listings, okay, this is total listings, active. Finally, you guys, thank God, we have a new 4-year high for active listings for this time of year. We are finally, look at this, finally over where we were last year. In fact, we're over last year, the year before, and the year before. 4-year high right now with active units for sale. This is absolutely great news. Again, demand in the dumpster, inventory finally starting to come back. And I want to remind you, what I'm saying is we need a sustained 900,000. I'm not talking about pending. I'm not talking about new homes. I'm talking about existing. We need a sustained 900,000, and we will start seeing price decline again. That's exactly what we saw in 2022. The problem, part of the reason for the dead cat bounce, we didn't sustain, okay? We didn't sustain that level of inventory. We had a dead cat bounce in 2023. At least that's what I'm calling it. Regardless, let's get back into the data. Now, the trajectory has been going down for months of supply. We're sitting at 3.5 months. Again, we're up 4-year record. Okay, we have a 4-year high for this time of year. So we're sitting at 3.5 months. We need this to sustain at 5 to 6 months. In my opinion, we will see massive price decline, but we need this to stop going down. We need this to start going up. Now we need 6 months for it to be considered a buyer's market. So we are far from 6 months. Hopefully that will improve throughout this year. But the trajectory, again, you guys, is going down as far as supply, but it is a 4-year high for this time of year. So inventory is exploding. Demand is in the dumpster, and price cuts are also surging. So all of the factors that we need for the law of supply and demand for prices to go down, and yet it's not going down. How's that possible? But look at this, you guys. We also have another 4-year high, massive 4-year high for this time of year for listings that had price cuts. Normally this goes down this time of year. You guys can see it's kind of going down here. It went a little bit up here in 2022, but regardless, you guys, it's going up. We are sitting at 5.6%. Normally it doesn't get this bad until we enter fall. Right now, prices are being cut like crazy. 5.6%, beautiful thing to see. But again, the data we just went over is showing prices are going up. Something bad, very bad is happening in the housing market. Now, before I tell you what bad I think is happening in the housing market, this is the last chart of Redfin home buying demand, which is down a whopping double digits year over year. And remember, in 2023, sales for existing homes was the lowest it's been since the 1990s, lower than the GFC. Now, a lot of people are like, no, sales were at GFC lows, but that's when you count new homes. When we're looking at just existing, like all of the data, most of all of the data we're looking at right now, it's way worse. And so the fact that demand is worse than this time last year, you guys, is a sign of how bad the housing market actually is. So again, when we look at all of this stuff, price cuts exploding, all right, demand in the gutter, supply going up, prices are still, according to that, going up. How can that be? The only thing to me that makes sense, if, big if here, we are to trust the data, is that there are still people that are weak buyers. And those weak buyers are probably accompanied with weak realtors. We need buyers, both buyers and realtors right now to say no. We need to say no. We need them to say no, and we need them to walk away. It's okay to walk away unless you're getting a great deal. And the same thing for realtors. We need realtors to say it's okay to do that as well, instead of saying put a price on ownership, date the rate, and marry the house. You better buy now before home buying comes back this spring. But unfortunately, the people at the top, just like Redfin, are encouraging fear of missing out. In fact, they're encouraging it even more. People are even more desperate because free agents, title companies, realtors, loan officers, it is a recession already in the housing market. And so I say to you, if you're out there purchasing, keep your guard up. No one's going to care like you care. The housing market right now, whether you agree it's going to go up or whether you think it's going to go down, is very extremely toxic. And regardless of what side of the coin you're on, if you don't have your guard up, if you think you're savvy, you got another thing coming to you. The entire industry is melting down right before our eyes. And so it has never been a more important time to have fundamentals when purchasing. Find wedge, find cash flow. And don't be discouraged if you're on the sideline. If you're on the sideline renting, it's okay. In fact, it's never been a more okay time to rent in the history of the housing market. It's never been as okay as it is now to wait. In fact, we get paid to wait in the form of treasuries. So calm down. It's okay. Things will get better. But again, what really matters is how you're waiting right now. And other than that, guys, if you're out there investing in real estate, you already know I wish you luck and I hope you win.